All right, everybody, welcome. Doug McKay, antiwallstreetguy.com on Friday the 29th. I'll see you next week on the still charts, but prior to that will be the 4th of July, so happy 4th of July midweek. We have the overall trend based on today's close, including volume, pattern recognition, moving averages, as long, neutral to long. That would not be an all-in situation for us. But we will start buying stocks coming out of basis or that have come out of basis today and even prior today that are not too fully extended. But let's focus on the S&P 500. A couple of the things that got us bearish last week and earlier this week was the move down below the 50-day moving average. You cannot see the 30-day on this chart. You cannot see also the weighted 45-day moving average, just some moving averages we put on the chart. But this blue line is the 50-day moving average. We got below that. This day wasn't so bad, but this day was once we started to break the inverted head and shoulders neckline. Again, this was a bullish pattern a couple weeks ago because we had the left shoulder, the head, the right shoulder. We were good provided we held this, got above the neckline. S&P broke out, got above the 50-day moving average. All signs were go. This is a little different scenario today, primarily because the move was much bigger on a percentage basis with heavier volume. So for the record, the trend is long. We'll pull up a chart later, but you can see on other charts the big gap in here. So ideally we would want to see a fade next week and then break out beyond this level of resistance here. But for what it's worth, the close above 1340, not just because the 50-day moving average is there, just because we're clearing resistance. And out of this channel that we drew in earlier in the week and last week, the trend is long. All right, so we're going to stage in the managed accounts. In other words, we won't be buying with both fists early Monday morning. We'll kind of cost average in, both into weakness and into strength. All right, let's take a look. Let's take a look at the Dow. This is a 400-point move, over 400 points in the last 2 trading days. What was the low yesterday? 12,450. What is that? 430 points in 2 days. I remember looking at this yesterday when it was down, I think like $1.74, 173 points in that range, which looked highly probable that we were going to take out these lows and possibly come back down and maybe test a 200-day moving average on everything. Let's take a look at the NASDAQ, COMPQ. Huge move today, up 3%. Again, this was looking lousy yesterday. Big percentage moves. This is an example where we have this gap. Ideally, we'd like to come back down and fill this gap at some point. I think it will. Earlier yesterday, or even midday, before the last hour with the EU news, it looked like this was potentially a target. So it is what it is. Would I do it differently again? No. I mean, we had this signals to get out. You never know if this could have continued down, and who knows. Same thing on this way up. You want to take these breakouts. If they work, they work. The market will do whatever it can to shake you out. You just got to stick with it. Have a short memory. Stick with it, meaning taking your signals, not buy and hold. All right, let's take a look at some charts that I threw up on the blog last night that are, yesterday's news, as they say. This is Coca-Cola, but this will give you a good idea as to what we're looking at. This is I didn't put up this chart. Well, I guess I did put up this chart yesterday, but this is a chart of Coca-Cola. I like this little cup and handle coming out of a base. Not too far extended, decent volume. This was it on a weekly chart. I think this is the chart I put up last night. I think it was the only chart of the day. This is where we had it breaking out back in March. It continued to hold that trend line, came back in, broke out again. Again, here you never know if this is going to do this type of thing, like a Ford or Research in Motion or Netflix or whatever else. But it held somewhat of a tight base, right? Our channel here, just above 72 to 78, that range, and then broke out. So this chart still looks good. Let's go back to a daily chart. I'm covering these because I said I would cover them yesterday in the or last night in the post. I like this. This is we said we would buy this back. What I like about the Class B shares, we bought them in here. We sold them here because I saw this coming down. We actually got out intraday here, but it held. Closed just a little bit under the 50-day probably this day. Came back up. Great looking chart, not too far extended. So unless this thing really pops Monday morning before I can get into it, we're going to be back into the Class B shares. This is the type of chart we want to see, where challenges, usually 3 to 4 times, and then it's going to break either to the upside or if it's challenging it to the downside, usually the 4th time. Based on probabilities, it goes lower. So the bad news is today we were not long. We were 100% cash. That's the bad news. If there is any good news, even though we had a sell signal midweek or earlier in the week because we were below moving averages and trend lines and whatnot, we did not get short. I just really haven't trusted this market lately to get short. And if we were going to get short, we want to keep that trade on a percentage basis tight as far as a stop. All right, let's take a look at some of these other charts. GE we had. Again, keep in mind I put this chart up, or not the chart, but I put this symbol up last night before this move today. I would not chase it here. And by the way, anything that I say that I'm not going to chase does not mean it won't go considerably higher from here. It just means that I want to deal in probabilities, where we're looking at charts that are not too far extended. And as always, if it comes apart, we will get out. Either lock in a profit or take a loss. And that goes with everything. The indices, it's just the way we're playing the game. We're trend followers here, trend traders. We're not looking at 15-minute charts, and we're not buy and hold. Let's look at Chevron, CVX. Again, I'm going off of what I like this chart still. Again, I put this out yesterday, the symbol. The fact that we got above this is nice. I don't think this is too far extended. So there's a lot of different charts that I'll be looking at for the managed accounts Sunday night. XLU, nice looking chart. Money's still going to the safe stuff, utilities. Kind of a cup and handle. Ideally, you'd want to see a little bit of a fade here and then get above these highs. Let's take a look at PFF, which is an ETF that is a preferred stock ETF. Good looking chart. Again, we put this up yesterday. Low volume today, but nonetheless a nice looking chart. I would use probably a 2% stop on this. And I think that's it, you guys. Well, I always say that and then we go to something else. Let's take a look at gold. Gold to me, first of all, everything bounced today. We're going to have to take a look at oil. Again, I'd want to see it clear this resistance. If you're in now, just put a stop here. That's a pretty tight stop. 150 to 155 percentage-wise is a tight stop. Like I've said for the last several weeks, I think there's better places to fish than gold. Let's take a look at copper, JJC. Huge move today. So that is obviously bullish for the market. Let's take a look at, I want to finish up with treasuries, but I want to go to, boy, what did I want to go to? Let's go to oil. Let's go to the ETF OIL. Big move today. But again, I know there's people that bought it here. So if you're going to bottom fish on anything, make sure that you have a stop in place so you can preserve capital. So when it eventually takes off and runs, you can wipe out a host of small losses. Nice thing about this today, it happened on volume. Some of the oil stocks got a big move today as well. I'm hesitating a little bit because I'm looking off to my right here at different symbols. That's Exxon we have there. Okay, so what did I want to finish up with? I wanted to finish up with bonds, treasuries. Last week I thought this might be a short play. that still may be the case, but I'm not seeing it. There's no confirmation yet. The interesting thing about treasuries today, and let's take a look at the longer end, is as good a day as equities had, for whatever reason. Who cares, right? We just want to follow the tape. We don't want to try to rationalize it. Otherwise, we're going to experience paralysis by analysis. We don't want that. We don't want to be smart and try to figure out why it happened, what's going to happen next. We just want to look at the chart, look at the charts, live in the moment, make the decisions, and have an exit strategy, either to lock in profit or limit loss. But having said that, you would have thought that treasuries would have got slammed today, or the ETFs tied to treasuries. That did not happen. They actually held up very well. And I've always been taught that since the mid-'80s, with friends on the floor, that the smart money was the bond trader. So we'll see. We have the overall trend in equities as long. We're going to go neutral to long. That means we're going to dollar cost average in ETFs and selected stocks. And we'll see you guys next week. Thanks again. Happy 4th. We'll see you next week.